The bloodbath continues with silver price crashing again today. It's now below $30 an ounce. Is there any end in sight? Buy your gold and silver online from SD Bullion. New customers get gold or silver at spot by visiting sdbullion.com/new. Thank you so much for watching. I do sincerely appreciate it. We're going to take a look at what's going on with precious metals. Things are getting nasty today.
Getting ultra nasty.
Silver is currently sitting at $29.94, down $2 today, about 6.5%. But here's the thing, over the last 2 days, we've seen silver go down about $4. And this is the biggest 2-day drop since 2011. Here we are looking at April 29th, 2011. You can see silver was almost at $50 an ounce, and then it just got absolutely crushed. It went all the way down to $34 an ounce, so a $13 drop in about a week. So that's the biggest drop we've seen in silver since the Hunt brothers. I mean, you got to go all the way back to the 80s to see another drop like that. Then we had a pretty big drop during COVID, when COVID was sort of getting kicked off. So silver was at $18.61. That was sort of the high before COVID. A month later, we saw silver down at $12.12 an ounce. So about a $6.50 drop over the course of a month, though. But what's going on right now? I mean, this big drop in just 2 days. This is the biggest drop in silver I have personally seen since I started buying it, which was about 8 years ago. So again, down over $4 in just 2 days. I mean, this is getting wild. Let's take a quick look at gold. It is also down big today, although not nearly as much as silver. It's sitting at $3,036 an ounce, down about $85 or 2.7%. So gold still over 3,000, but guess what has happened to the gold-silver ratio overnight? It is now over 100. That's right, this is the second time ever in all of human history that the gold-silver ratio has gone over 100. And this is screaming to everyone out there, silver is undervalued compared to gold like it has almost never been before. As I pointed out in my last video, there was one time when silver went over 100 to 1 with gold, and that was during COVID. You could see the high right here, 122 ounces of silver to buy an ounce of gold. That is the all-time high. So gold-silver ratio is increasing. Silver is crashing at the moment. What is going on? Well, we are once again seeing the stock market tank, and it has to do with the tariffs. So the headline here, Dow on correction path as China strikes back against U.S. tariffs. So they are placing their own tariffs on the U.S. They're kind of going back and forth. And of course, everything is going down as a result. We did have some economic news that got released today. It's the employment situation for March 2025. And I'm not going to bore you with all the details here, but the highlights, we saw employment rise by 228,000 jobs in March. It was predicted to come in at about 140,000 jobs. So this is better than expected. However, unemployment went up to 4.2%. It was 4.1% the previous month. So more jobs were created, but unemployment got worse. And we actually have heard Jerome Powell already speak on this today. Here's what he said.
This morning's jobs report showed the unemployment rate at 4.2% in March, still in the low range where it has held since early last year. Over the first quarter, payrolls grew by an average of 150,000 jobs per month. Turning to the other leg of our dual mandate, inflation has declined sharply from its pandemic highs of mid-2022. It has done so without the kind of painful rise in unemployment that has often accompanied periods of tight monetary policy that are needed to reduce inflation. More recently, progress toward our 2% inflation objective has slowed. Turning to monetary policy, we face a highly uncertain outlook with elevated risks of both higher unemployment and higher inflation.
Okay, so he does admit there's a risk of higher unemployment and higher inflation. Interesting. But what about the tariffs? Look at this headline. China retaliates with 34% tariffs on U.S. imports. Jerome?
We have stressed that it will be very difficult to assess the likely economic effects of higher tariffs until there is greater certainty about the details, such as what will be tariffed, at what level, and for what duration, and the extent of any retaliation from our trading partners. While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain.
So there you have it. He says he's still worried about inflation, and they're probably not going to be cutting rates at the next meeting. Look at this. Powell sees tariff raising inflation and says Fed will wait before further rate moves. Okay, so how long are we going to have to wait, though? According to the predictions by CME Group, they're saying that there is still a 35% chance that rates will come down at the next meeting on May 7th. However, fast forward to June, they're saying it's basically a sheer certainty that we will get a rate cut by summer. Is it going to be 25 basis points, 50 basis points? We don't know. So you can expect rates are still going to come down later this year, but maybe not at the next meeting. Let's get back to precious metals. Of course, they would love to see a rate cut while inflation is still high. This would be super bullish for gold and silver. But the headline today reads, Trump's tariff crash sees gold down 0.8% for the week, silver down 10% with stocks, copper, and oil. This chart here is showing some interesting things. So the dotted line is showing the lease rate for gold going down. But also we're seeing the separation between the New York gold price and the London gold price close. You could see it was actually quite a bit of separation here a few days ago. They're now about the same. So with gold price the same in London and in New York, there's no point in shipping more gold across the pond. I mean, we know a lot of gold was coming from London to New York. I don't think that's going to be the case anymore. Here they say that the price gap between London spot gold prices and New York's COMEX June futures contract fell below $10 per troy ounce. Also, the lease rate for 1 month gold meantime fell from 0.6% to 0.37%, retreating to pre-Trump election levels. However, with silver, it was even a bigger crash. Silver's New York-London price gap shrank harder, effectively crashing to zero at just 3 cents per ounce and down from $1 ahead of Wednesday's trade tariffs announcement from the Trump White House, while London lease rates to borrow silver for 1 month sank from 6.8% per year to barely 3%. So it's getting cheaper to lease gold and silver. So how low can silver go? Well, the reality is, I don't know. Could it go all the way down to $25 an ounce? I don't think that's off of the table. I think we've seen silver go down an incredible amount in just 2 days, and there's a lot of news still unfolding. You know, are we already in a recession? How bad is it going to get? What about rates? Are we going to see a rate cut? What about future tariffs? How's all of that going to play out? We're just going to have to wait and see, but my strategy has not changed. I like to buy when the price is going down, so I'm going to keep buying more silver. It is so undervalued compared to gold. Of course, as this situation evolves, I'll keep making you videos updating you on all of the changes, but until then, I'll see you in my next one. Silver Dragons out.